Hola a todos, hoy os traigo un vídeo, la verdad es que es súper interesante. Hoy vamos a hablar sobre el uranio, energía nuclear, de la mano nada menos que de Scott Melbye, la persona que más uranio ha vendido en el mundo. Vamos a aprender muchísimo, acabo de terminar de grabar, hemos tratado temas, la verdad, que bastante interesantes, espero que lo veáis entero, porque la verdad es que merece la pena. Vamos a tratar sobre todo la actualidad del sector del uranio, sobre todo lo que está pasando con Rusia, Ucrania, la emergencia de la energía nuclear, esa demanda que está pasando en Estados Unidos, en Europa, también en Asia, el conflicto de Rusia y demás. Espero que os guste esta entrevista, sobre todo que aprendáis. Y si os gusta, dejar un buen like, ponerlo en los comentarios, sobre todo si queréis compartirlo con alguien que quiera aprender sobre este tema, porque yo creo personalmente que es una oportunidad de inversión bastante atractiva a precios actuales. Y bueno, no me enrollo más, espero que disfrutéis la entrevista. Ahí está. It's my pleasure to introduce you today to Scott Melbye. Not calling you old by any means, but you are a veteran of this industry, almost 40 years of experience in the uranium market. You didn't leave this market. So for everyone to introduce you, can you tell us briefly who you are, Scott, and why your word is very, very reliable and very important in this market?
Well, great. And it's great to be with you, Luis, and your viewers. It's always a pleasure. Yes, I've had the real pleasure and blessing to be in this uranium and nuclear energy industry for 37 years now. So every aspect of brokerage or trading of uranium, procurement of uranium for nuclear power plants. But the majority of my career has been with major uranium mining companies. Three of the four largest uranium companies in the world. I've served in executive positions with Cameco, the big Canadian company, Kazatomprom out of Kazakhstan, and even Uranium One out of Russia, which gives me a lot of interesting perspectives these days. But more recently, the last 8 years, I've been in much more of an entrepreneurial phase of my career, working with smaller companies and building and creating new companies in the uranium space. Coming alongside Amir Adnani at Uranium Energy Corp, and being part of what has been the building of the largest uranium mining company in the US, but also founding Uranium Royalty Corp, which is the one and only uranium and royalty and streaming company in the uranium space. So following the example of Franco-Nevada, Wheaton Precious Metals, Sandstorm, Royal Gold, these very successful royalty companies and other basin precious metals, we've started the first company in uranium space. So it's always a pleasure to talk to you about the uranium market. Particularly in Spain too, I have very fond memories and experiences there supplying uranium to the nuclear power plants of Anusa in Spain. So happy to talk about what all this happening in Russia and Ukraine means for energy markets in Europe and uranium and nuclear power and specifically.
Well, thank you for that introduction. Well, the both names that you mentioned, the UEC and UROY, all the audience that are following me, there are two names that I've been praying loud about, and they probably know about, but we can later on the conversation talk more precisely your opinion on these both companies. But
Sure.
first of all, so for everyone to be in the same page, I would like to ask you, what is the uranium used for, and the movement of the nuclear energy that you are seeing now in the market?
Yeah, so uranium is quite simply an energy mineral. It is the fuel for nuclear power plants, which nuclear power runs on fission of uranium atoms to create heat, to boil water, to create steam, to turn a turbine in an electrical generating plant. Nuclear power today is about 10% of global energy. In the United States, it's 20%, but it's a very significant, it's the largest source of carbon-free energy. And this is what's really been interesting to see, because over my 37 years in the nuclear industry, you could almost easily summarize that the political right has always enjoyed and supported nuclear power as part of an all-of-the-above energy strategy, which includes oil, gas, coal, nuclear, wind, solar. And the left, political left, has always been almost violently opposed with the anti-nuclear movement against nuclear power. But what we've been seeing in recent years as we move towards the decarbonization of our energy industry and our economies is a realization by environmentalists and those on the left that there's no way we can make a meaningful dent in carbon emissions going forward without a significant component of nuclear power. It's as clean and carbon-free as wind and solar. It's as safe as wind and solar in terms of the safety record over the last 60 years. But where it really differs, and it's an important point to note, is that wind and solar, the capacity factors, the availability factors of those energy sources, they run 30% of the time. So we can't be 100% dependent on something that runs 30% of the time. By contrast, nuclear power runs 95% of the time through cold polar vortex conditions, through drought, wind, rain, sun, darkness, night, day. And that's an important point because it provides carbon-free energy that is baseload power. If you're a strong believer and supporter of wind and solar, we're not a threat to wind and solar. In fact, it is a complement. It makes wind and solar work, knowing that we have other carbon-free backup baseload supplies that can complement that energy source. So we're seeing huge acceptance from the environmental community, from the investment community, in the obviously in the European community. The EU went through a great debate, the taxonomy debate, to determine whether nuclear power was indeed green and sustainable. And despite objections from Germany, that was adopted into the EU plans, which now opens the door to investments by ESG, green energy funds. Basically, investment dollars can flow to nuclear energy and uranium investments in a way that they couldn't just a couple years ago. So it's really exciting. I mean, what that means in terms of nuclear growth is we've seen 62 new large nuclear power plants come online around the world in the last 8 years. So even though Germany has continued with their phase out and the Japan restart of reactors in that country has been slower than we had hoped, we're actually generating more electricity from nuclear power today than we did prior to Fukushima. And we're also beginning to see now the advent of small modular and advanced reactors. These are promoted by tech leaders like Bill Gates, Peter Thiel, even Elon Musk has spoken out in support recently. Yeah. But they're the smaller reactors that can be built in factory, shipped on site, are more scalable, lower cost to develop, and they can also coexist in grids like you have in Spain that are you have a heavy element of intermittent wind and solar. So energy sources that are going to coexist there have to be able to ramp up and ramp down depending on whether the sun is shining and the wind is blowing. So very bright future for nuclear, and that means uranium growth and demand for uranium increasing at 3% per year over the foreseeable future. In fact, could be much higher given some of the forecasts.
Well, you've done a great overview because you have summarized a lot of questions that I have, because I wanted to you testified in Congress for you are the president of the uranium producers of America. So, do you think that there's a movement in the US for the renaissance? Like these are, for example, there was a lot of talks about the Action 232 and the imports that you should take from Russia and from other countries. Do you think that, is it real? Like there's a movement towards nuclear energy?
Yeah, there really is. I don't have to tell your viewers that politics in the United States, couldn't be more polarized, with Democrats and Republicans agreeing on very few things, and it's sad. But one of the things that is really encouraging, and I saw it in my Senate testimony, where I sat before a panel of Republican and Democratic senators and seeing almost unanimous support for nuclear power from both the left and the right. And that's something that wouldn't have been the case 5 years ago. Another thing that really resonated with these senators in the United States and congressmen is the realization that we're relying too much on Russian sources of supply for this nuclear energy. In our country, uranium or nuclear power supplies about 20% of our electricity. It's 55% of our carbon-free energy. but almost 100% of our imports are coming from foreign sources. Now, we're fine importing from free market countries in Australia or Canada, but the problem is 50% of our imports are coming from Kazakhstan, Russia, and Uzbekistan, countries that, you know, I've always said have not shared our values and our interests, and that couldn't be more clear than what we see on the news constantly now out of Ukraine. And so it's really a heightened awareness around domestic industry. And so while in the Trump administration, the focus was putting sanctions on foreign uranium, the focus now is more, I think, positive and, you know, less punitive to the utilities, where we're encouraging things like the strategic uranium reserve, where on a bipartisan basis, a strategic uranium reserve similar to the strategic petroleum reserve is being established in the US to buy domestic uranium and create a stockpile that we can use in times of energy crisis or for our defense needs going forward. We have not only the nuclear power plants that create electricity, but our Navy, the nuclear Navy, the 104 reactors that we have powering the 84 aircraft carriers and submarines in the fleet all rely on uranium fuel. They're essentially small modular reactors in those vessels. So uranium is not only an energy security issue for us, but also national security. And so we're really encouraged that you know, this kind of support is forthcoming. And frankly, just the market conditions with uranium now having increased beyond $52 a pound in the spot market today, we're getting to a point where, you know, very competitive uranium mines in the United States like ours in Wyoming and Texas, we can compete on a global scale and be, you know, part of that diverse strategic uranium supply to electric utility companies, not only in the United States, but also Europe. European utilities have buy some of their fuel cycle components from American suppliers or Canadian suppliers. It's a very global industry. So we're not just a source of secure supply for the US, but Europe as well.
True. And I wanted to ask you because, well, you've talked really nice points in these minutes. For example, the Russian bans, for example, the war that is going on now with Ukraine and Russia. Joe Biden said, I think it was today or yesterday, that they wanted to ban the energy metals like oil, gas. He didn't say uranium, but it's energy as well. And you said 50% of those imports in the US are coming from Russia, from also Kazakhstan. So this conflict, how can affect to the spot market of uranium? For example, we saw yesterday the nickel went up 300%, and Russia only exports 5% of that metal. So how do you think that playing out in the uranium market?
It has a big impact. And the announcement from the White House yesterday did impose a ban on oil, gas, and coal coming from Russia, but it did not cover uranium, which is curious because of the dependency you have. US utilities are buying close to $1 billion worth of uranium from Russia as it is presently. So perhaps they're lobbying against this. I think it's morally or ethically very wrong when we see what's happening, you know, the horrible attacks on civilians, hospitals, power plant, things that is just not in a civilized world, doesn't belong in 2022. So so even though President Biden did not put the ban on uranium yesterday, there are senators and congressmen in Capitol Hill that are pushing for a separate legislative ban on uranium. But we also may get news even before that, in that Putin retaliated with threats of imposing sanctions of his own on exports of commodities that Europe and the United States rely on from Russia. He, the foreign minister, announced that the list of sort of export banned commodities will come out within the next day or two, and that could very well include uranium. So it could be that Putin himself bans the uranium supplies to the United States. But again, European utilities, American electric utility companies, we really don't need to rely on Russia or Russian-controlled countries. There's a robust fuel cycle of uranium producers in Australia, Africa, the United States, Canada, the uranium conversion facilities in France, Canada, the United States, and enrichment supplies out of the UK, Britain, France, Germany, and the US. So I think as a society, we got a little bit lazy about sourcing critical and strategic minerals, commodities. I mean, even things like ventilators and pharmaceuticals during the pandemic, we realized that we were far too reliant on China. So I think there's a rethink, not rethinking global international trade. I mean, that's one of the most powerful elements of capitalism that lifts economies around the world. But there's more attention being paid to things that are critical to our energy security or national security. There'll be more attention about producing those domestically and relying on friendly allies for these supplies rather than countries that aren't sharing our interests.
Well, you said something very interesting. If Putin bans uranium exports, that, from my own point of view, I think that could have a dramatic impact in the short term of the price of uranium. I know that companies like yours, right, like the US UEC can produce up to right now to 6.5 million pounds of uranium, of this critical uranium, and you also have inventories. But the shock that can happen drastically in a moment, it can move the price.
Well, it's an important thing to think about is if your viewers are looking to invest in uranium companies like UEC, uranium is not as efficient a commodity like copper, gold, silver, where price signals almost immediately signal more supply or less supply, whether the price is falling or going up. Because uranium, when markets are oversupplied, we tend to see prices go lower than they should and stay lower for a longer period than they should under normal economic theory. That's because we have a lot of hedged contracts. Gold is sold on the spot market. Even big producers, it's all sold at the spot price. In uranium, there's a lot of hedged long-term contracts. So in the last 10 years, even though uranium prices went from $70 a pound to $17 a pound from 2010 to 2017, uranium production around the world continued to increase year over year. And it wasn't until 2017 that production started to cut back. That's a really long delayed lag time for a production response. Well, now we've had 6 years of production well below consumption. It's almost 62 million pounds below global consumption. So we've been living off of inventories and secondary supplies to meet demand. But there's a finite amount of inventory that can meet demand. So now uranium prices are going up. So what is the incentive price for new production? Many had said, well, $50 would be an incentive price where uranium production could come online around the world. That's not happening. We're already at 50 now. Inflation has caused the price of PVC piping, steel, labor, fuels are all going up. So the incentive price for new uranium production may be higher than the market realizes. So the uranium price could increase well beyond what the incentive price for new production is. It could be $100 a pound or higher. And we still wouldn't begin to see the production come online. It will eventually, but it'll be gradually. It takes 7-8 years to permit a new mine, for example, anywhere in the world. I mean, you've seen in Spain, some mines are not even allowed to go forward, like Salamanca, where in a region where you have 50% youth unemployment, here's a mine that would create jobs, technical jobs, labor jobs, economic growth in the Salamanca region, yet it was prohibited from moving forward. So all these kind of factors really point to volatility in uranium. So you can have very long periods of low price, but you can have uranium prices go much higher than the economic clearing price for the commodity. And that creates great investment opportunities. And what I would encourage your viewers is look to the producers around the world, including UEC in the United States, that have stable jurisdictions. They're not under the control of Russia or China. They have licensed, permitted facilities. It's their decision to restart, not a government authority, and has obviously low production costs. You have to be in the lower couple quartiles of production costs to be an early mover. And we have that with our 2 production platforms in the state of Texas and the state of Wyoming. We tend to think of the United States as one big country, but it's a collection of 50 states. And not all states have the same sort of regulatory or attitudes towards energy development or mining. I can tell you Texas and Wyoming, with such a great oil and gas history, coal development, they're very positive towards uranium mine development. We have no opposition for our operations. In fact, we have full support of the local communities and state and federal politicians. So we really view ourselves as one of the early movers, that when uranium prices continue to increase, we can go into production in a matter of months, not years, and be able to sell into the improved market. So we're part of the, you know, if we have to reduce our reliance on Russia and the United States, well, we're one of the companies that's going to help reduce that reliance. We should have done it all along, but it's now happening.
You position yourself in this trend. You didn't realize the war was coming or Putin was going to ban sanctions, but the demand was there, the supply wasn't there, and you position yourself in the US there for a long bear market, as you said, that the supply and demand imbalances were pointing out to a stronger price, and that's cool. One question that before I jump to USC, because I'm a shareholder of USC, I've been, when I talked the other day with Amir, I said, or I actually told to you as well, I bought it in the COVID. It's sad to me for say to the CEO that but for me was good, and the people listening as well, some of them listen. So that's good. And for example, there was a big shark coming as well into the market, which was a Sprott. All that supply, all that inventories that was hanging out, they took it with the ATM structure that they have. And I recall one interview you said that in your 37 years of experience, you've never been more bullish on the sector. Can you elaborate a little bit on this?
Yeah, it's really true. I mean, I think, 37 years of being in this industry, I've seen ups and downs and periods of growth, periods of retraction. But I think nowadays with half, in the previous bull market in nuclear energy, the nuclear renaissance, when we saw nuclear power plants being built again around the world, we had half the world was against us in terms of environmentalists, the investment community, the political left. We don't have that opposition or hurdle anymore. So the growth of nuclear power plants really can move forward in a way that it hasn't in previous cycles. And you've also very much mentioned this Sprott Physical Uranium Trust. And I'm sure your viewers are going, well, how could one company have such a big impact on the uranium market? But it really has. This is a physical uranium investment where if you don't want to invest in a particular mine and have mine or country risk on a particular producer, you can invest in the commodity itself by investing in Sprott, or in the UK, the equivalent company is called Yellowcake PLC. They buy uranium, warehouse it on behalf of investors, so the investors can make the decision. They can buy and sell these shares as if they were buying and selling uranium, which is obviously very difficult to do as a private investor. So what's made it incredible is the amount of investment dollars that Sprott has attracted. They've now accumulated an inventory of over 50 million pounds. That's 50 million pounds of uranium that's been vacuumed up out of the market, that was overhanging the market. And just at a time when the market was rebalancing on its own power, we had this Sprott Physical Uranium Trust come in and remove all the remaining inventories. So now we're very much transitioning from what was an inventory-driven market to a producer-driven market. And an inventory-driven market as a commodity investor is not a good thing, because the threshold cost of selling may be very low. It may not have a cost of production associated with it. But now, if we're going to meet demand, you have to look at the availability of mine production, how quickly can mines come online, what is the cost of production. And so Sprott has really provided a real boost to the uranium. It didn't change the dynamics. It was the tipping point for the dynamics. It really kind of accelerated what was already happening.
I like what the Sprott organization is doing. Actually, you work for Uranium Participation Corp, right?
Yes, yes.
So you know what's going on. a lot. But I'm not a shareholder of Sprott. I like what they are doing, but I won't leverage with your companies as well. But the question that I wanted to ask you is, how much supply is left to sell? Because the supply demand imbalances there is a deficit. They are taking from the inventories, and now Sprott is taking that hanging fruit of with the inventories. How much uranium is left? Can you give us like any idea of that?
Yeah, so we try to put our arms around what is excess supply. So there is a lot of uranium inventory, above ground inventory in the world today, but the nature of nuclear fuel, utilities hold 2 or 3 years forward supplies or more in France or in other countries. So that inventory is not liquid to the market. It's not coming to the spot market. The Chinese have stockpiled a lot of uranium in advance of their growing program. So if you kind of unpeel the onion and you look at what's really available to the market, I think about 3, 4, 5 years ago, we might have said that was 350 million pounds. That sounds like a lot, but we've been producing 60 million pounds a year less than we've consumed for the last 5 or 6 years. And so we've really drawn on that. So that's kind of an abstract look at the fact that we may be getting down to the bottom of that inventory. But if you want to look what's actually happening, if you were to go into the uranium market today and try to buy 1 million pounds on the spot market, you would not get your order filled at the spot price. You would have to clear off several tranches to clear your order. So that's very indicative of a market that's not oversupplied. It's very thin. One thing that hasn't been present in normal levels in recent years is utility demand. Utilities contracted very heavily in the last bull market cycle. They contracted for uranium in volumes, which was record volumes. 200 million pounds of contracting, was not out of the norm. And that should be kind of what utilities should be contracting for. If we consume 200 million pounds a year globally, they should be contracting forward for that amount. What's been happening lately is utilities seeing low prices have not been afraid of future supplies or supply constraints. So they've been buying at a level of about 75 million pounds per year, which is far below normal levels. Once they return to the normal procurement levels, they're going to find the shelves depleted of inventories. They're going to have to look to mine supply. Well, not a lot of producers have been advancing mines or opening new mines, and that's where we're going to get the supply crunch. It's great to have Sprott coming in and buying up excess inventories, but what really will move the needle is when the utilities come to the market, and they had already begun to do this and are we're seeing much more public requests for proposals for long-term supplies, and they're looking for producer supplies, not traded pounds in a carry trade, sort of a near-term strategy. They're looking for 5 to 8 to 10-year contracts with producers.
And there is not much of them right now. The supply is really, really thin. Well, I wanted to talk now of Uranium Royalty Corp, because the vision there, what I take from the company, is that you want to grow that supply, because you let's say put the check for the company in a non-dilutive way to offer financing to the company. Could you tell us about the business model?
So Uranium Energy Corp is a good example of a producer that's developing mines and bring pounds to the market. Uranium Royalty Corp is a very different investment model in that we invest in the mines and operations of other companies. And we do it by acquiring royalties or streams. A royalty is a financial interest in future production. A stream is a physical interest of future production. But it's a way for mining companies to finance their new mine development. They can go to a bank and secure debt, which comes with lots of covenants and strings attached. They can go to equity markets, which has been very popular, but there is a limit to how many shares a developer can issue without diluting the existing shareholders. So a third alternative is royalties and streams, where we'll provide the upfront capital needed to build a processing plant, to build a well field, to get a feasibility study completed in exchange for future payments from future revenues and production. So it's a very nice, non-dilutive way for developers to get their minds into production. And for the investor, what you get is a bit of a managed, actively managed ETF, because we have our people with decades of uranium experience doing due diligence in all of these projects, whether they be in Australia, Africa, Canada, the United States. And we're investing alongside those companies and then sharing that exposure to our investors.
Yeah, and you have accumulated, I think it's 17 projects right now.
Yes, we have 15 royalties in the portfolio, including 2 of the largest mines in Saskatchewan, Canada, Cigar Lake and McArthur River. We have investments in Yellowcake PLC, the physical uranium trust, and also we've made open market investments. We've tapped into our contractual relationship with Kazatomprom through Yellowcake. We've made open market purchases, and we've entered into a supply stream agreement with CGN out of China that runs the Husab mine out of Namibia. Why are we buying physical? We realize as a young company, we only listed publicly 2 years ago in Toronto. We're now listed on the NASDAQ in the US as of this time last year. So the company's only been public a little over 2 years, but we really wanted to give early investors that exposure to uranium near the bottom of the cycle. That uranium we acquired from Yellowcake probably came into our portfolio at $21 a pound. The physical uranium we've bought is acquisition cost of under $40 a pound. So this provides a nice balance sheet item, which can be turned to cash. We can buy more royalties, buy more uranium, but it's really been a nice feature for investors till we get to a cash flowing state. In our portfolio, probably the earliest movers that will see cash flow the soonest would be McArthur River, which Cameco and URANIO announced is restarting over the course of this year. Cigar Lake has been in operation, had been shut down due to COVID, but those are the 2 world's largest mines. We have a small interest. It may cash flow $5 to $6 million a year in a steady state $60 uranium market. But for a company like ours, we can run a lean operation like a royalty company for less than $1 million a year. We don't have overhead. We don't have mines, big workforce, holding land costs, all these things. We're investing in other people's operations. So we have 4 or 5 people that are running this company, which has now become a $400 or $500 million market cap company and can grow. Frankly, I think we'll grow to $1 billion company within the next couple of years. We're very active already early this year. It's only March, and we've got 6 or 7 really attractive files that we're pursuing, small royalty acquisitions or larger financings. So, we really see the uranium market needs mine development financing, and we see the market's very good for acquiring new royalties or establishing them.
5 or 6 files to build that portfolio. So keep it up. I think that's going to be really good news for shareholders. And I don't want to say this very loud, but you don't have no competition right now. For example, if you go to gold and other metals, you have the Franco-Nevadas and Wheaton Precious Metals and all this fighting for
Yes.
the same royalty. You don't have competition right now, and the market is in the tipping point. So I think that's it. Thank you for your time. But first of all, I wanted to ask you the last question. If I missed something that you said, Luis, you didn't ask this that I'm paying a lot of attention to, or do you think we covered it?
No, I think we have. I mean, I think for your viewers, nuclear power is really playing a key role in our economic futures, our energy futures. That's a good thing. That's baseload power. I mean, if we do green energy poorly, it's going to cost us in high electricity prices. Take Germany. They pursued the green energy approach, but they shut down nuclear at the same time. It's just resulted in more carbon emissions. From Germany has made very little progress, even though they're the most righteous about carbon emission reductions. Their electricity is 50% higher than neighboring France. That's all nuclear. And it's caused them to rely on Russian gas, which has obviously causing enormous problems. So nuclear power is really, I think, seeing the strengths of nuclear power really being realized. And that means we're going to need a lot of uranium to fuel these green energy power plants. So again, it's been a pleasure being with you today, and certainly look forward to doing it again sometime soon.
Thank you, Scott, for your time, and everyone listening, thank you.